Hello friends, let's take a look at the prices of Tezos. Now this is Tezos that I've got behind me versus the Bitcoin prices. In a couple of minutes we'll go over and take a look at Tezos versus the dollar prices. Sorry, what happens is I film an episode, I do these episodes daily, and then I put stuff on the chart. Sometimes it's muck, sometimes it's really super interesting and key, regardless of what way around it works out. I tend to kind of forget what exactly it was that I'd said at the time and have to approach things afresh anyway. So when I tuned in there and saw that, I tuned into this particular chart, saw that area there that I'd drawn a circle around, I thought, well, that's super interesting, but I'm going to have to delete it because I'll waste more time trying to figure out what it was that I was saying than I would if I just took it from fresh again. I really appreciate everybody who tunes in daily to these videos, by the way. Really appreciate it. And join the Discord down below. I've got a link to that so you can chat and all that jazz. But anyway, here we are, Tezos, yada yada. Let's go back to the Bitcoin price first off and join in again with the story that I actually said recently in the past about what we could be looking at. Now, of course, I proposed this over here when we were coming up and putting in this area and asking the question, are we putting in a double top? I appreciate over here in the 2-day that, sorry, as well, I must have done the link analysis pretty much entirely in the 2-day. Oh, I did that on purpose. Sorry. You see how quickly I forget things. We've got this sort of double top area. Here's your top here, here's your top here. Now, we did get higher highs as well and sort of body closes over there. That's great to see having happened, but you could look at this as being a top, you could look at this as sort of being a basin, and you could look at this as being a sort of handle over here, and we could be looking towards at the minute whether or not we get a cup with handle forming on this chart, right? What's happened is we've come down to here so far in this area, and what is this line? What is this line here? As I draw all that like a child on the charts, what is this line here? That's the 236 Fibonacci retracement from this highs, having drawn in from the lows down there, and that's body to body, by the way, isn't it? It doesn't even really matter because the wick and body are so goddamn close. And what have we got right now? Well, currently the prices are operating below that area at in the 3,400 area, 3,450. So below 3,500, you're in this Fibonacci retracement, and you could reasonably look down to that 3,250 area where you can see the 21 EMA will be coming in at as well over the next wee while, or indeed if you wanted to go even further towards that 50% retrace area, because this is where the previous low was, and you know, you could have all of that happen and remain fairly bullish overall in terms of this, because if that did happen like that and then went up from here, then you would most certainly be looking at that and asking, is this a cup and handle? And that's kind of interesting. Now, if you want to see what the cup with handle, I think it's called cup with handle, is about, then download or buy whatever from your retailer Pilkowski's book and read about it, or just look on the internet, or indeed maybe look back at one of the episodes. I don't know if I ever called it one. I don't know if I've got a full-on explanation. I know I do have a full-on explanation. Just don't know what I titled the episode. Watch every single episode I've ever put out, and in there you'll get a full-on explanation for it. Anyway, whatever. Could we be looking at this? And what's the psychology anyway behind this sort of type of thing? Well, you have a top here and then you have a top here, and you get this double top idea. Then you move back down into sort of corrective type territory, and the prices go down, and people start thinking, oh, hey, what's going on? You know, like we've clearly just topped out, and that's all we're getting. And as well, you have diminishing volume at the time and all this sort of stuff going on, and you're like, oh no. And then what can happen is if the prices then come at some point back up again to this area, then you're asking the question, have we got a triple top on the go, or are we going to break through that area? And breaking through that area actually at that time is a move which can offer you up, or you can manage your risk in here and stop out anywhere in there. I don't know, I'm not a financial advisor, so I'm not going to tell you exact numbers, but you know, but then if it does break up above that, having managed your risk in a fairly easy to manage way, which mitigates risk in and of itself, and therefore is a lower risk, then you could have the absurd idea happen where prices actually manage to break past the previous resistance on the third attempt, which to a lot of people seems like absurd whenever they're looking at that in terms of a retail perspective. Of course, 9 out of 10 viewers of this are probably Tezos bulls in the first place anyway, so you know that wouldn't seem absurd to you, but you've heard of concepts like double tops and stuff like that before, and you could see things going on the go. So let's have a look. Let's just sort of keep this more brief this episode and say, is this divergent? RSI is not divergent. Stochastics, look, that's higher over there, it's not divergent. DMI, that's not divergent. The MACD over the last wee while is not divergent. Now, could it be compared to previous highs? Yes, it is, and that is the case across the board. So you decide yourself whether or not the divergence between this high here and our latest high, which is higher as we talked about, and that is divergence, therefore, is going to result in something more than just the handle of this happening. Now, to say that there would be a handle was obviously quite fair as well, looking at as in terms of charts being predictive. I always say they're not predictive in and of themselves. It's just in order to make an assessment and say we could see something happen here. That was fair, and it's transpired, so that's good to know. Overall, in terms of the RSI, I don't want to see it dropping down below the neutral zone as part of this overall upward move during this period, but if it did, then I'd want to see it getting rejected from the bearish control zone for sure. I don't want to see these things converge, any more than they have to. Overall, I kind of want to see them maintain this upward trend that they have. That was a really bad angle overall. And likewise, it's just likewise across the board. I want to see this happen, and eventually then what I want to see happen is after this, if this does get a handle and all the rest of it, and the prices then come up to these areas, that we have the MACD go up and put in a sort of overbought conditions. Want the RSI to go into overbought conditions. Really want that to happen. This might sound counterintuitive to you. I may want the stochastics to come up into extremely overbought conditions, which we rarely see, so that we can actually have an actual higher high that's not divergent and put in a higher low thereafter, with the confidence that that's all part of a normal macro structure towards the upside. Otherwise, as well, looking towards these key areas on the price charts, just to say, are we going down past them, and do we actually have a trend towards the downside? Unfortunately, we can't say that we fully do until we're back down there at that 2,400 area again. I'd obviously be extremely worried at the 2,600 and the 2,800 that we spoke about so often on these episodes overall, where we have those numbers coming in at, but we'll come back to that tomorrow and tune in again as always, and watch tomorrow as I get incredibly confused as to why I've drawn all this junk on the chart tomorrow. I'll be like, what the hell is that? Okay, over towards the dollar prices, and let's take a look. Now, things have been going really well. We stuck this exclamation mark on here, presumably as a sort of, let's say, this is where we want to see the prices go higher than. I think that one kind of speaks for itself. Don't need too much interpretation. Looking to the left, you can see there's a 236 Fibonacci coming in at that high where that exclamation mark is, which we could then invalidate this Fibonacci retracement. Now, this is ancient. It's not new news to us, but we want to see that happening, and we also at the same time want to be able to see us going up to 786 and not get rejected from that, which is a fairly common retrace point, and actually go on and make the higher highs. And the actual higher highs in the dollar prices, of course, is this high over here. You're not actually putting in really proper higher highs yet. Sorry, go back to Bitcoin, quite yet necessarily until you're there. Of course, you can just sort of discount that price action, move the charts over, look at this area here, say higher than here, higher than here, higher than here, yada yada. It's not divergent. It is divergent on the MACD, not on this. And the stochastics, it's not divergent, and the RSI, not divergent, and that's what you want to see. In terms of these areas, though, if this was a lower high, and this was a lower high overall, and seeing the RSI being higher than over here, that would be hidden bearish divergence as part of an overall downward trend. So you don't want to see that. Other crap that you could talk about, sorry for being sort of dismissive of things, is whether or not there's some sort of broadening bottom happening here. You could also, just like the next chapter in Bilkowski's book, you could just remove that bottom line. Instead of calling it a broadening bottom, you could call it a bump and run reversal pattern. Of course, that's the way it is with patterns. I'm never going to say that I'm either for or against them. I'm always going to just leave that slightly ambiguous for you because that's the most fun way to do it. I've got a lot of faith in a lot of them a lot of the time until I don't, in which case I don't, and I'll try and keep it kind of mysterious for you. Anyhow, that's enough for looking at that one. That's their sort of small term targets. We want to see the prices actually maintain themselves above this green line here. We've got a 618 Fibonacci retracement in here at $2.80. That would be fantastic, in fact, and we want to see them seeing themselves above the $2.70. That's fantastic. The price action has been really great between this high and this high over here. It's really too early to say, but you could say that if this was a local high and another local high, that is this tiny little bit of bearish divergence on the go there. That could happen if this was a local high. It's way too early for that, and that also is not enough price action to really say that. Of course, between the previous one and where we are now, it's not divergent. Could we see pullbacks though, all the way down even as far as say 260 or 250, still remain outside of this channel area. We're using that as upward support and putting in higher lows overall as part of an overall upward trend. We absolutely could without getting too panicky. But again, to reiterate, as we have so many times before, in the past, what we've got the more exciting targets over here on the on this one. Now we want to be above the 786, not have that be a retracement point for us. It's the same chat we just had a second ago, essentially. on the other chart, whatever one that was, versus the dollar, but the whatever Binance or whatever it is. And but over here we're on hit BTC, and of course we could pick up again, and just in terms of the stochastics here, what we're looking at, you could see something like this happen, as we said in yesterday's episode. This trend over here, we want to see it maintain above this trend line, and that we have fairly distinct and clear there. And you can even draw it back down the way as well, and show like how when we broke the trend line, if that suits your mentality, of course that's fine if you want to think about things like that way. And so we want to see things go up and stay up the way instead of coming down here and whatever. So that's what we're looking at for the next wee while. It's not divergent, that's all good. Apart from potentially you could say at the end, but we know that saying that preemptively is stupid. We're looking towards the prices staying above 270, as we know, as we spoke about before, but we've got that horizontal line in there. We're in the median band of this channel, so that's interesting to be bearing in mind as we're looking at 786, and could we get turnaround? Yes, we could, but this is again when we're looking towards these things and looking for certain things to keep happening for us. Of course, we know that the MACD is divergent across actually the last 3 highs and whatever else, but that's that. Across the last 2 highs, but that's just the way that is right now or whatever. We have to wait and see how things pan out. In terms of the horizontals, we're looking towards 285. Can we get above that? And if we can, then maybe we're looking at $3.11. And this is what we've been building up to saying. $3.11 is the 236 Fibonacci retracement here on this mental big Fibonacci retracement, which goes in from highs up there at $12 and all that sort of stuff. So if you want to get super carried away and excited, then that's the first port of call for that. We're not going to do that too much, and if we do go past that area, we're not going to do it too much. We're totally going to do it though because it's exciting and fun. If we do go past that area, then we're looking up again at the maximum that we really want to be so super over the top bullish about before taking profits if you're like crazy and holding on to things for a super long time. Up here at the $4.40 area where we have a 1618 retracement, and that's kind of going to be interesting for us. But just before getting ahead of yourselves, 344 of course, where we have all these wicks coming up at open and closing above $3.11 would be very positive up towards that top end of that channel. Maybe we'll break out of that at some point. We'll have to revisit the oscillators and everything else as we're doing all of that. As I've said lots of times, you'd have to see this going up to extreme overbought territory really. The last time we've seen it up there, 30th of January and stuff, and before then the 14th of February, going back to the 14th of February 2019 there, where prices were really low back then. Was that 2019 I was looking at? Possibly, whatever. And then but looking back over here to, did I go that far back? Anyway, over here in January where it was last that high, that's where we had peaks at, so you're looking at coming up here, and we want to see that being able to go up to those areas, and then the dynamic obviously emerges where if we're not getting higher than here, and the RSI and the stochastics and whatever else are going into these extremely overbought territories and not putting in highs, well then you've got hidden bearish divergence on the go. Come up here with the price action though, and actually go up towards these top areas, then you could see like turnarounds here for like breathers whilst remaining bullish. So that's kind of what we're looking at overall on that one. I mean, in terms of downside, we've got this big thick line that's drawn on here at 235. Let's see the prices remain above that. But of course we've got our horizontal friend over here at 258 that we've seen recently, and we've seen that get retouched to, and that I'm not a financial advisor, none of it's financial advice, but prices have been there over the last couple of days and they're 30 cents up from where they were then, so that's a solid 10% move up from then. So there's plenty of opportunities around, should we see these things getting revisited. 270, 258, 230, and 215 are my 3 downside sort of hopeful reversal turnaround points, and the ones we talked towards the upside in terms of the crazy bullishness, well, that's all sort of, I think we've covered that enough. Thank you so much for tuning in. I really, really appreciate it. I hope you enjoyed the episode. Hope you share it with a friend who've got one that you think would like it, blah, blah, blah. Obviously, from one episode to the next, I repeat myself an awful lot because we're looking at the same thing. It's not, Tezos is still Tezos the next day and whatnot. A trend is still a trend and all the rest of it. But I hope that provided you enough context context to help with whatever you're looking at in your own personal circumstances and whatever other YouTubers you look at and whatever else, to giving you a little bit of context for your trading and help reduce the greed, the FOMO, and the fear, which in my head turned out to be FEMI there. Yeah, catch you next time. Thanks so much for tuning in. I don't know if I'm visible on screen right now. I'll check that in a second. I hope I am, but if I am, I don't think I'm going to cry about it. I'll catch you next time. As always, thanks for tuning in. Share it with a friend. All the rest of it, very much. Join the Discord as well. And yeah, hi to everybody. See ya.